What is going on, everybody? It is your boy Stas here. Welcome back to another video. So we got a lot to break down in this video. The Fed minutes, interest rates, economic conditions, earnings, stocks I'm looking at, charts I'm looking at. We have so much to break down, so let's not waste any time. Without further ado, hit that like button, subscribe. If you guys find value, take a sip of your coffee as well, or whatever else you're freaking drinking, and let's get into the video, guys. So it's currently 4:30 p.m. on the East Coast, and before we dive too deep into the video, let me tell you, Nvidia reported earnings and they are tanking right now. We'll break them down later in this video, so make sure you guys stick on throughout. But before we do, let's go over what went down in the markets today. We had the S&P 500 close up 1%, the Russell up 1.5%, the NASDAQ 100 roughly up 1.5% as well, and we had the Dow close up 0.6%. The VIX is now back under 30. It went down 3.7%. As we had the metals sell off as well, we had gold down 0.75% and silver down about 0.3% on the day. So you guys can see we were pretty choppy all throughout the day. I mean, overall now with hindsight, the benefit of hindsight, we can see that we were uptrending pretty much all day. You know, we hit our first high at 397. That was at about 10:30 on the East Coast, and then we hit almost 400 a share here on SPY at about, when was that? 315 on the East Coast. So we made higher highs, we made higher lows all throughout the day, but it was a roller coaster ride of a day either way, guys, even though we had a pretty nice close. And look, after the bell, the roller coaster ride is continuing. We're actually selling off a decent chunk after the bell. SPY closed at 397.37, and right now it's down over $1 after the bell. And mind you, we closed only 30 minutes ago, so we're selling off not drastically, but a little bit, you know, a little dump off here after the bell. And when it comes to triple Q, let's pull this up. Then we'll talk a little bit about interest rates and the current economic conditions as, you know, what we saw from the Fed minutes, right? And this is all from the FOMC. So we're noticing triple Q in the morning was right around 285. It got very hot towards roughly 315. It hit about 294. So from the low of the day, right at open, to the high of the day, triple Q was up 2.7%. And now look at it. It went from 293, it closed at 291, and now after the bell, it is under 290. It is at 289. In fact, it almost got under 288, as we are seeing, again, some selling pressure here after the bell. So overall, we did well today. Pretty solid day, but it was a volatile day to say the least, right? So we got the Fed minutes at 2 p.m. on the East Coast, so let's talk a little bit about that. And we're only going to just really go over interest rates, current economic conditions, and this is straight from that document. I read through it. I didn't read all of it, I'll be honest with you guys, but I did skim through it, and I read the beginning more in depth. So when it comes to interest rates for the current meeting, and I'm assuming they're referring to May 3rd, 4th, just a couple of weeks ago, right? Federal funds futures implied around 50 basis points of policy rate tightening. An open market desk survey respondents assigned an average probability, listen to this, guys, of 80% to that outcome. So at this point, we're pretty much guaranteed 50 basis point rate hikes, right, moving forward. And we know that. You know, the Fed is being very upfront about that and honest. We have to do these 50 basis point hikes, multiple of them, right? And the median desk survey respondents also projected 50 basis point increases in the target range at the two following meetings and another 125 basis points of increases by the middle of next year, bringing the projected midpoint of the target range to a peak of 3.13%, obviously substantially higher than it has been in previous surveys. So we're on our path to 3%, 2.75, whatever it ends up being. That is where we're headed right now. And we kind of already knew that. I mean, this is nothing new at the end of the day. But again, this is coming straight from the Fed minutes. I read through it. Like I said, most of it. Not all of it, most of it. Current economic conditions. This is another thing that stood out to me, right? FOMC participants noted that although overall economic activity had edged down in the first quarter, household spending and business fixed investment, had remained strong. That's a good sign. Job gains gains had been robust in recent months, and the unemployment rate had declined substantially. But, big but here, and this is what's obviously hurting right now. Inflation remained elevated, reflecting continued supply and demand imbalances, higher energy prices. For Pete's sake, guys, my Toyota Corolla, when I first got it, like over 2 years ago at this point, I was paying $27 to fill my tank. Now I just paid over $50 for a Toyota Corolla. So we're all feeling that, right? That increase in energy prices. And there's obviously broader price pressures from Ukraine, the conflict with Russia that is causing, price pressure. So there's a lot going on right now. But overall, basically what I got from that is right now, consumers are still fairly strong. Household spending and business fixed investments are remaining strong. And until we really start to see a material change in that, who knows? Maybe we could dodge a recession. I don't know. I think we're already in a recession right now. I've said that before. I could be wrong. We might not be in a recession. We don't officially know until that Q2 GDP number comes out. But yeah, that's pretty much what's going down right now. And again, that document is about, it's not that long. It's like 10 pages, but there's a decent amount of reading to do there. So go do it for yourselves. Make sure to go read that and do your own due diligence. As always, guys, I'm not a financial advisor. I'm not telling you what to buy. I'm just breaking down things here, how I see them, and kind of from my personal perspective, right? So what do you guys think? Drop me a comment down below. Make sure to smash that like button, subscribe. And before we dive into these earnings, let's get a word from our sponsor of the video today, Moomoo. Let's keep it short and simple, guys. If you were walking on a street, you saw a $100 bill right there on the ground, would you walk past it or would you pick it up? Of course you would pick it up, right? That's like this offer from Moomoo. You got 5 stocks right here, each up to $2,500. You have a chance at getting Twitter, a free share of Twitter. This is free money. Why would you walk over it? So if you haven't gotten your free money from Moomoo yet, use my link down below. Deposit at least $100. You get up to 5 stocks, each up to $2,500. And if you deposit at least $2,000, you get a free share of Twitter as well on top of that, and that actually runs out at the end of May. So use that link down below, stocksurfest.com/Moomoo. Cheers, guys. Let's get back into the video. Alrighty, guys. So let's go over earnings now. Nvidia just reported, and you guys can see Triple Q, which tracks the NASDAQ 100. This ended up taking a big hit. So let's talk about what's going on with Nvidia right now, which again, they just reported, and now you can see the chart. They are in free fall mode. They closed at $169.75, and they went up over 5% on the day. Now, after the bell, we are seeing a pretty substantial drop. It dropped all the way to 152 initially, which was a drop of 10%, and now it's chilling at about $158, which is a drop of about 7-ish%. So Nvidia is down a decent chunk after the bell, considering this is a multi-billion-dollar company. 7%, that's a big drop. We're talking billions of dollars here, guys. Nvidia did adjusted EPS of $1.16, which missed the $1.29 estimate. That missed by a pretty decent chunk there, guys. And revenue came in at $8.29 billion versus the $8.12 billion. So they did beat revenue, but again, they missed on adjusted EPS. And when it comes to guidance, I don't think I saw anything when I was writing down the notes for this video. Wait a second. I see it now, though. There we go. Nvidia sees Q2 revenue of $8.1 billion plus or minus 2%, okay? And the estimate was $8.45 billion. So they actually guided down on revenue. Wow, they missed that estimate by a wide margin there, guys. Not too bad, but yeah, weak sales guidance on the horizon for Nvidia, that is for sure. And who knows, at this point, guys, what have I been saying for over a year at this point? Nvidia, for me, is a buy under 150, preferably under 120 a share. I'm just going to be honest with you guys. If this starts moving towards that direction, I might have to start a position. That's the way I'm looking at it at this point. You know, this is a growth company that I've wanted to own for a couple, I'll be honest, probably a couple of years at this point. Not like 5 years or 10 years or something crazy like that, but 2 or 3 years, yeah, for sure. I've been wanting to own Nvidia, and now might be our chance. I really hope they go through some short-term pressures. I mean, a lot of companies are going through short-term pressures right now, and this could be our opportunity to hop on. Let's say this sell-off gets exaggerated. Maybe something in the earnings call pops up that people don't like, which could send the stock lower. We could easily go to 130 on this. Don't be surprised if this goes to 130, 140. And again, 120 under, that is where I'm going to be looking to nibble a little bit. Heck, maybe if I'm feeling crazy, I might nibble a little bit in the 130s. We will see, guys. Make sure to subscribe. I will definitely make content on this if I do end up pulling the trigger on Nvidia. So for me, this is a company that got way oversold, or rather way overbought, way too overvalued. Now it's coming back to reality. It might still have a little bit of downside to go, but I'm going to be ready for it. So that's Nvidia. Let's talk about Snowflake now, which is getting mollywopped last I checked. Let's pull it up and see what's going on. Yeah, Snowflake is down $30, or not $30. Not that bad, guys. Not that bad. Relax. $18, still pretty bad, but not $30. So it's down $18 after the bell right now, which means in terms of a percentage value, it is down 13% after the bell. And mind you, it went up on the day, over almost 2.5% on the day. Now it's down 13% after the bell. So Snowflake did negative 53 cents of EPS. And the crazy thing is, guys, the analysts were expecting a profit of 1 penny. So they missed very badly on EPS, and they beat revenue. I almost tricked you there. You probably thought I was going to say they missed revenue. No, they beat revenue, $422.37 million versus $412.76 million. And they see, and this is the kicker here, guys, which is really setting the stock down 13%. They see Q2 2023 revenue of $1.88 to $1.9 billion versus the $2.03 billion estimated. So that's not good. Lower guidance, and they missed wildly on EPS, and at this point, they're slowing down in terms of that growth as well. So Snowflake is getting hammered. I mean, this stock is already down. It was down 70%, 65, 70% heading into this report. Now it's probably down even more than that. So Snowflake is not looking good. I'm not touching this thing, and quite frankly, I haven't done heavy research into it fundamentally. I haven't looked at the numbers to even say, oh, it's a buy here, it's a buy there for me personally. So I don't even know. I got to look deeper into it. It might be opening up as a value. Who knows? I mean, under $100, considering it was 400. Warren Buffett owns it, I think, right? And that doesn't mean you just go blindly buy it, but I'm just saying there could be something here. There could be something here. So I might have to dive deeper into it now that it is actually down. Wow, it is down a lot, guys. So look out for that one, Snowflake. And Splunk, on the flip side, is up a lot. Look at this. SPLK. Splunk is now sitting at $98 a share after the bell. It closed at 93 on the day. Went up 5% on the day. Now it's up $5 after the bell. In other words, up 6%. So we got earnings from Splunk, EPS of negative 32 cents versus negative 74 cents. So they beat EPS. And they beat revenue, $674 million versus $628.75 million estimated. So double beat for Splunk. And get this, guys. They raised their full year 23 sales guidance from 3.25 to 3.3 to 3.3 now to 3.35. Hopefully I didn't confuse you there. But they upped their sales guidance, and that's ahead of the estimate, which is very important. And they see the next quarter sales 735 to 755 million versus the 737 million estimated. So I know I'm throwing a lot of numbers at you guys right now, but just know Splunk's guidance is strong, and they double beat for the previous quarter. That is why it is moving up in a pretty nice manner here, or whatever you want to call it. I don't know what I'm trying to say here. It's moving up quite nicely after the bell, right, guys? And that has a lot to do with the guidance, in my opinion, right? So Splunk right now, and we actually saw this double bottom, or I called it out recently. I forget where I talked about it, but I outlined these, you can see the two circles here, the double bottom on Splunk. Now that they reported these strong numbers, it's starting to break out of the 50 SMA. Maybe this starts making a move towards 110, 15, 20 a share, right by the 180 SMA on the 4-hour time frame. That is where this could be going. So SPLK, watch out for that. Another one that I'm looking at here, guys, is Dick's Sporting Goods. They reported in the morning, and you guys probably saw, this stock crushed it today, up 9.7%. They did adjusted EPS of 285 versus 247 estimated, and they did revenue of 2.7 billion versus 2.59 billion estimated. So double beat for Dick's Sporting Goods. And when it comes to their guidance for EPS, it's not looking so good. So that's one thing working against them right now, and also their full year comparable store sales, those are expected to be down 2 to 8%. Also, that's not good for them. That's not working for them. That's against them, right, guys? So this stock is moving up because it probably already had all of this priced in. This is most likely not a surprise, right, guys? I mean, geez, look at this stock. It is down. It was down 60%, 60+% at one point. Now it's rebounding. I mean, at that point, it's going to take an earnings that is just horrible for the stock to plummet, and they double beat, so that's all it really took for the stock to rally a little bit. Not too bad. So in terms of earnings from today, guys, that is it. We had Nvidia, Snowflake, Splunk, Dick's Sporting Goods. Now tomorrow we have more earnings, guys. Who would have thought, right? We have Alibaba, ticker symbol BABA, and I got a lot of flack on the channel, guys, here on YouTube, on TikTok. Follow me on TikTok, by the way, at StasserFest. And we might do a giveaway at 20,000 on TikTok, so if you haven't done that already, go to StasserFest on TikTok. Follow me on there. I always get flack, Stas, why are you buying Chinese stocks? All they do is go down. You're going to lose all your money, and I've said this before. I might lose all my money. You might be right, but for me, I'm only putting a speculative amount, an amount that I'm willing to lose. NIO is another Chinese stock that I own that I bought at a very cheap price. I averaged up, I wrote it up, locked in some profits. So I'm playing with house money on NIO. So I don't want to say I don't count that stock, but because I still own it, obviously. But it's house money, so it doesn't mean as much to me as Baba does at this point, because Baba is not house money yet because I'm down heavily. That's why I'm getting flack on it. But it's all good because I might add more to my position, and I'm in it for the long term. And I think in 5, 10, 15 years, Baba will be a lot bigger. Call me crazy, but I think it will be. And yes, I know there's risks with the structure of the shares. You don't actually own it. I understand, guys. That's part of the risk here, and I'm willing to take that. But I do believe it's undervalued, and we have earnings tomorrow, probably pre-market. Let me double check. Pre-market, and their average EPS estimates expected to be about $1.08. Average revenue right around $29.45 billion, which is expected to be up about 1.8%. So they're not going to be doing very well compared to last year, but I'm looking 5, 10 years into the future. And a lot of people, let's just be honest, when it comes to these Chinese stocks, they're not. They're focused on today, what's going on in the past couple of months, the fears for the next couple of months, next year or two. I'm not really focused on that. I'm looking, again, 5, 10 years out with this stock. And if I pick up shares and my average is $120 when it's all said and done, when I'm done building my position, or maybe it's $100, who knows? This could be a stock that goes from $100 to $500 in the next 5, 10 years. You guys got to realize this stock was once, let me show you on this 3-year, it was once a $300 stock. Now we've gotten completely destroyed, 75%. Clearly, these Chinese stocks are heavy in a bear market, and I'm buying. I'm buying because the upside is extraordinary at this point, but again, there's also risk. And I'm willing to take that risk to make a massive return, to potentially make a massive return over the next couple of years. So that's Alibaba. Dollar General and Dollar Tree, those are tomorrow as well, guys. DG's in the morning, maybe. DG's in the morning, 9 a.m. Central Standard. They're expected to do $2.33 EPS with average revenue of $8.7 billion. So watch out for DG. And we have Dollar Tree probably in the morning as well. And Dollar Tree did well today, guys, up 2.6%. They're expected to do $2.01 EPS with revenue of, what is that? I can't even talk today, guys. $6.76 billion. So not too bad. Watch out for in the morning. Again, guys, Baba, Dollar General, and Dollar Tree. So with that being said, we'll wrap it up there. I wish we had more time to talk about GameStop and AMC because GameStop ran up another 15% from where I made my previous video. If you guys remember, I called it out in my previous video. It was at, what, $100? It was up 15%. It closed up 30%. Unbelievable. So, yeah, we can't get deeper into that, but shout out to GameStop, guys. What a freaking day. And with that being said, I appreciate you all. As always, hit that like button, subscribe, drop me a comment. It really helps me out in the YouTube algorithm. Feel free to join my Patreon if you want all my real-time buys, sells, call-outs, morning videos, all the moves I make in real time. I post on Patreon, link down below, or you can go to StockSurfS.com/Patreon. And don't forget to get your 6 stocks from Webull, link down below, and your 5 stocks from Moomoo with the chance at getting a Twitter share for free, guys. All that is linked down below. And with that being said, I'll catch you all in the next video. Thanks for watching as always. Peace out, guys.